Welcome friends and traders. Let's look at this quick chart of high VIX Sunday open. The indicator is level 2 Sunday open high VIX designed for ES. This is 60-minute chart. It should not matter because all we're looking for is the opening print on Sunday. And once we have this opening print on Sunday, we can lay out this structure for the entire week. So let's revisit the structure, how it unfolded. On this day, there is a vibration of, if I add it together, 1, which is because of 8 plus 2, the day number, which is digitized into single digit, is 1. If I add this 10 and 7, 3, so 1 and 3 is the expected vibration for this day. We cannot anticipate this is going to happen, right? Because the VIX has to go up for volatility to expand like this. That's why, all right, we have this. Anyway, we went to 3, and also you notice there is a 7 and 9th harmonics. Look inside the bracket, that is the vibration we are after of 7 and 9. There is also severe combinations of these, which we'll discuss a little later. Next day, we are dealing with a vibration of 369. If I add these together, it's 2. This is where the complexity comes at times. If I add it all together, it's 9, which is 369. Now this 369 is split into 1 and 2, which is combining together as 3, not a flat 369. That will also come, just advancing the patterns. And you can see here, it went to 2 and 1, 3. Watch this. Alright, and then we have flat 369. You can see inside the bracket we have 9 and 3 sitting right here as well for this day. Alright, if you're option trader or bias trader, next day we have 3, and if I add it together is 1, if I subtract is 4. So we're looking at all this 3, 1 and 4. Market is sitting at 3, so this one doesn't really count because it is sitting at 3. So we're gonna go to some other 3s and 4s. So it went to the 4. You can see here, right here in the bracket is 4, went to 4. From 4 it took off to 3. Why 3? Because 30 is 3. It is split as 2, 1, 3 right here. I don't know if it is 2, 1, 3 or is something else going on. That is 4 actually. 2 and 2, 4. So it went to 4 at the bottom, flat 4 to 2 and 2, 4. Flat 4, 2 and 2, 4. And then it came down to 4. Another 4, inside 4, inside 4, went to 4, 4, 4. It's just vibrating to that number. Now that is, the game is over actually for that day. Next day, market opens, midnight opens here. We're looking at 3, 1 is 4, 4 and 7, subtraction is 3, so it's flipping on the other side, so it's 3, and then at the same time if I add them all together is 10 plus 1, 11 is 2. So interesting. So 2 is going to be hot. 4, which is natural frequency, 31 is 4. So 2 and 4, and then now this could be compressing. This is 2 and 1. 1 and 1, 2 and 1. So this is where it was attracted to before it cracked down. Now we're gonna use something else. Saturday polarity beams also. First, let's mark these levels. So subtraction is 3, so we're looking at 3. Is there a flat 3? It is here, did not do anything. Went to 31, which is 4 directly. Then went to 2, and 2 and 2 is right here, which is 4 again. So this day it is vibrating at 248 on the day number. All right. Okay, so we next day is pretty much 8. It is sitting on 7. This is 8 minus 1 is 7. Then 9, we don't see any 9 anywhere close by, and 9 is here. When market open, it was almost at 9. So sorry, 4, apologize. Inside numbers is what we're looking for. So if I add it together, this 9, subtract this 7, and if I do 8 divided by 1, it is 248. So this is how we are looking at. Okay, so subtraction is 7. Now we don't have any oscillations here, which we can. Let's try this balance imbalance. Oscillations on the top at the frequency, at the bottom at the frequency. We need 2 of these to be below or above the blue lines. This one did not work out, this one worked out. Now this is hourly chart, right? Hourly chart. This is actually 2 of these went above the red line and one is touching this. So hourly chart, remember this is balance imbalance. Market is just gonna rotate against the mean. That's what this is checking, and we are saying, okay, if you're off the mean right here, are you at the frequency and off the mean? So first of all, look at the price, and then this one gives you the slingshot. Off the price, slingshot. This one did not work out, stopped here, didn't go anywhere. It was early morning. This one is right here at 7. 2 of them below blue. You have to hold it. Now remember, we made some videos regarding higher time frame and contract tracker. Remember, monthly charts, yearly charts, 3 months chart, nothing is telling market is bearish. The rotations will take place. People were asking if they are going to go down, where are they going to go? Based on that, if you look at these videos, the videos. If you go to the videos, right here, right, it talks very clearly. There's nothing telling us to be bearish. Same time, we made this one, polarity flips. If you look at the video from yesterday, now this frequency is coming from the contract initiation. the ranges of this. Now this bullish bar is sitting right here. Unless they cross this below this guy is this again pretty. It's a monthly monthly chart. Sorry, weekly chart. I forgot. Let me see. It's a weekly bar. Okay. So anyway, but remember these frequencies they are hitting very precisely, but you need to have a bias. Why are they going to take the market down or up based on 1 year, 3 months, monthly chart? Nothing is telling market is going to stop at this point. If it stops it, this guy has to be first nullified, and this frequency we talked about, the pattern of 845, it could come down here. That means this guy has to be flushed off. This has to be flushed off. This guy is going to, who broke this pivot strongly, has to be retested in this block area. Something has to panic the market down. And if it does on a monthly chart, you'll have a buying opportunity. Look at the monthly chart video. That's very, very important. Intraday, you'll be rotations. This because we have been saying this. We have been saying at this point somewhere in here that market is going to go blow up. Right? Watch the videos. Anyways, the point is, if market is going to come down hard, it has to be some reason, and these are the weekly bars and precise points, right, where they will hit it. So watch this very closely, and also watch this. At this moment in time, as I very clearly said, nothing is telling us. So it will be good if the market comes down to these yearly bars or a 3 month bar or 1 month bar. Great buys. You should be a tactical trader at this moment in time. Keep on buying. If you're buying, if you're putting $100,000, for example, for risking one to make 5x, you should be able to hedge the other side, because it's all tactical trading. You need capital, portfolio margin to do all this. All right, so there's always a market, a two-side market. This is intraday. We are dealing with intraday vibrations, and then this is what you saw which took place. Now if you look at this holistically, close of this, it closed below this week, and it's closed here on last Friday. They did not close below, they only closed below the first week, not the second week or the third week low. See that? They did not close it. They know that if they do, bears will get aggressive, right? They could, but long-term positional holder, long-term tactical trader, there's nothing telling us the market has flipped on the bearish side. Now market is going to do ping pong, because first time when you have tariffs, there was a severe reaction, then the reaction gets a little bit subdued. We also discussed that looking at the VIX, yearly VIX spike may have been done for this year. There has to be some reason. If you look at the VIX, we talked about this VIX. There has to be reason for VIX. It just went up and came down. So this kind of spikes you're looking for, it happens, as you can see, big huge spikes like these. It happens 3-4 times in 10 years, which are great buying opportunities. Then you will be dealing with minimum small spikes. You can just do trend lines. I showed you last time, Keltner channel. So look at the VIX. VIX has to be released a little bit up and down so market can move. Market is choking if they have to release the volatility, because option moves the stocks nowadays. Hedging has to change. Everything changes. Volatility and VWAL of V wall is there, wall is there, a lot of things are going, right? So multi-year VIX is going on, multi-month VIX is going on, but looking at this, it can stay there for years. See that? Years. Same thing for years. There's are bullish trends going on here. You can just see this. And you cannot predict easily that this is coming or this is coming. When it comes, these are the great buying opportunities. See right here? So for this year, most likely the VIX has peaked for this year. Just like it did for this year, this was special cases, this was special cases, right? It did not, they cannot stay here long. Otherwise, if they keep staying there, market is going to go down to zero. So keep an eye on this. Even though we have a lot of models, we want to really keep an eye on very large term charts, daily, weekly, monthly, 3 months, 6 months, 1 year. Beautiful charts. Watch the videos. Alright, that's very important to understand. Intraday, you have to play all the noise. And this is one of the approaches because they did not watch the closes. They did not close this week below. They did close below this. If they close 3 weeks, if they're gone below this or gone below this, right? 1 week prior, 2 weeks prior, 3 weeks prior. If they have closed below all this 4 or 5 weeks, then yes, we could have changed our sentiment. But the vibrations are there as suggested. If they really panic down because of tariff, macro events can trump everything temporarily. Those will be great buying opportunities. At the same time, look at those blocks on the top as well, where they're going. We already projected 70 to 100 is minimum target we're heading towards. 70 to 100 is coming. Alright, there has to be some reason not to. Okay, so you have to put all these things in perspective. Volatility, top is coming, this is coming. Alright, so for that day, I think this week we got all these things. So that is how it is. Now what we can do, one more thing, is use these Saturday projections as we have been talking about earlier. Can we mark all these levels through other means? Yes. So if we go to level 1, flux, and here we have a control, we'll make it to 30. Alright, so this is, we talk about the unseen world projecting the seen manifested world, which is right here. Sunday open here. Going back on Saturday, we're gonna do projections. How do we do projections? As we've done it before, we can do the edges. Where the market, this is a hot edge, hot flux line at the beginning. Why are we going and starting from here? Look at this open Sunday, go back. Which box defines it? This is the box which defines it. This is the box which defines it. So I'm gonna go with the red for now and beam it from the top and the bottom. And where am I beaming from? At the beginning of the next scenario. Okay, so that's how we will do it. We'll leave it alone. Now I have to beam it at the beginning or at the price crosses. So this is a hot zone, hot price. If this is a hot price, I'm doing it from the top, I'm doing it from the bottom. This is the next day hot zone. Same place, bottom and top. Alright, let's keep going. Now this is the hot zone. We can do it from the beginning, and we also talk about going to the intersections where the price first time hit it. First time it crossed it, it gave this activations, it gave this in hot spot, and there it is. It got all these highs and lows. If I keep continuing going forward, it also hit this. How about this guy, the ultimate low, right? Okay, we don't know that. That's coming or not. Once it cracks this line, which we were expecting it cracks down. So what we can do, right? This is where we say, okay, let's open up to the next one. So I have options, as I said, where the intersection takes place, or I go to the beginning, or I go to the end. That's all I can do. So from the top, I think I already did this. We don't know. We are gonna go. Okay, maybe it's gonna go here, and it does. For a while, it breaks again. So this day, I think all things went well except for this bottom. We were not able to beam this bottom, not from this 30 separation. So 60 on 60. Let's try 60 on 60. Volatility, when it expands, we have to expand our boxes as well. Okay, so now this is the box. The bottom is still the same. Sorry, the top is still looks like the same. I think we already saw those ones. Let me remove them. Alright, so now this is Sunday open. Go back to the left side. I'll beam from here. After I see that this is cracking, so now we can. It took how much time it took to change it? 5 seconds. So this is the box of Sunday, right? So we talked about in the beginning we do, right? The end also we can do if you watch the videos. So from this bigger box range, this is the Sunday open. The Sunday open, we can do the beginning and we go to the end. If you go to the beginning, it goes like this, goes to the end, goes like that, as you can see. So you have to get smart about it. Volatility is expanding. Within 1 or 2 tries, we can catch it. Now, one more thing we can do, we going through this scenarios, is look at the Mandela. Now this is 60 on 60, 30 on 30, 15 on 15, 60 on 60. I just came with these laws. There's no, because it's a harmonics, right? I'm trying to create a square of time and price. 60 minute, and I create a 60 by 60 is 360. And if I do 30 by 30, it is 9. So I like to stay with 369, obviously, for obvious reasons, my friends. Alright, so let's try this single bar mandala. We have 2 ways of structuring this. One thing is going to the initiative bar, the traditional way, which is right here, right? This big bar, and this is also big bar. So when market is going sideways, this bar initiated, boom, first initiative bar, huge bar, red one, we just put it here. And what are we now expecting? We're expecting the market to trap inside these. It stopped here for a while, it stopped here. Ultimately, this is the last line of defense, and then we have this projected beam, and obviously we also saw that we had the oscillator. So all these things are visible as we saw it. Alright, so one thing we can always check is when I place this, we can see, hey, is there any reflection which came from? Is there any other way we can do it too? So let's try the law of reflection, where we are saying, hey, I'm finding a bar which I curve fit the top and I'm looking for the bottom. My bottom came, boom, boom, top came. Now this broke. Now I have to do some readjustment of this scenario. Well, let's see if we can find something, if possible. And there it is. This is a balance bar. We're saying, okay, hey, if it reflected from the top area, it's gonna go to this area, and it does. See that? So this is the power of these 369 forecast tools, and people are taking advantage of these scenarios. Transformation is going on. All right, and I think it's time that you guys can experience it. Be a active participant of transforming your own life. The future is shaping very differently. Prepare for it. All you have to do is listen to all big companies, the trillion-dollar companies, where they're taking the market, where they're taking the industries, where they're doing things. It might be worth investigating a second stream of income, which is being projected right here, my friends. Thank you so much.